What's up traders? Welcome to another video. 5 things I wish I knew when I started Forex trading. I had a long journey in this field and there was a lot of mistakes that I made. There was a lot of pitfall that I could avoid if I had enough guidance. Today I'm gonna share with you some of my mistakes that I made, what you can avoid by learning from it. Those who don't know me, my name is Nizam. I create trading related content every single day. So if you're new to the channel, make sure you thumbs up the video, subscribe to the channel, and press the bell notification button so that when I release a new content, you get notified. With that said, let's get started. So what's the first mistake that I made when I started Forex trading? I didn't create a proper trading system, but jumped from one trading strategy to the other. So what I did is I learned a strategy from mentor, I learned a strategy from a YouTube video or from online, and then I applied this strategy this week. Sometime I got a result from this strategy, sometime I got a negative result, and then I jump onto the other one, and then I jump onto the another one. So what happened is I didn't learn any of the strategy properly, but just jumping from one to the other and did not have faith any of this. So that cost me a lot of money. I know that a lot of beginners traders do this because if you do not have a proper trading system, back-tested trading system, then you are doing the same, I know. But to do the trading properly, to make you trading as a successful profession, you need to have a proper trading system. So what is a trading system? A trading system is a written document and back-tested strategy what you can apply for a long term. So how do you develop a proper trading system? You need to backtest a strategy. You need to take almost 1,000 trades to prove a strategy that it works. Guys, this is important because our brain, our mind doesn't want to accept a strategy that we don't have proof, because it involves emotion, it involves your hard earning money. So when you invest a certain amount of money in a trade with a strategy, and then you don't know that how this strategy will function over long term, you will not believe in it. And then what will happen is, say, if you have a few losing trade in a row, you will just throw that strategy into the window. That's what happened to me because I didn't keep believing in it. So when you will have a back-tested strategy, when you will test it over and over again, then you believe that this strategy gives a result, positive result over the long run. So even if you have a temporarily a few losing trade based on this strategy, then you know that on a long run, after 100 trades, after 500 trades, or even after 20 trades, this strategy will give you money. But if you do not backtest it, if you do not write it down as a trading plan, then this strategy, you will not rely on it. So the first thing you have to do is to create a trading system by backtesting proper strategy, that whatever you know or you learn from anyone or you can learn from me, and then backtest it by yourself. Believe that this strategy works so that you can apply it. Then write it down as a formal trading plan. A trading plan is like a constitution that you will follow, because if you do not have a written trading plan, then you might be trading based on your emotion. This is normal because we are human. We have a daily life. I had a daily life. I had ups and downs in my life. I had a full-time job, and then I quit the job to start trading. There's a lot of ups and downs. And then what happened is this ups and downs affect our trading, because when we had a emotional life, or emotional incident in our life, then we try to take that revenge from our trading unconsciously, and then we do a lot of wrong trade, or FOMO trade, or a lot of emotional trade that we take. So to avoid all of this, if you have a written formal trading system, then you can say to yourself, okay, whatever happened, I will stick to my rules, I will stick to my strategy, and I'm gonna stick to my written trading system. I'm not gonna trade based on my emotion. Then you can become a profitable trader. So what's the next mistake that I made is I didn't know proper risk management. Remember, a good trader, a profitable trader, is a good risk manager. It's not about the profit. You will make money if you know how to manage your risk. So what is the risk management? Risk management is to manage your risk when your trade is not going in your own way, or when your trade is going in the wrong way. So a proper risk management can be how much you are willing to lose in a single trade. And the best I can describe is like you have to risk the same amount of money in each trade. That is the key, mate. Because when I started, trading, I took $50 risk in one trade, and then $100 in the next trade, and maybe $150 in the next trade, and again coming back to $50 in one trade. So what it happens initially is, I think it's you can resonate with yourself too, is when we get a trade, it feels like, oh, that trade could be a good one. I risked $50, and then I got another trade. Oh my God, that's better. That's a sure trade. I should take a higher risk on this one, and then I took a $200 risk. Then what happened is, the one I took $50, I have won the trade. I gained double that $100, and then the next one I risk $200 and lose it. So what happened is, my losing is always more than what I gain. So you have to manage your risk properly. That means you need to take a proper, every trade you need to distribute equally. You need to take the same amount of risk in each trade, so that you always have a same winning and same, you always have the losing amount is less than your winning amount. So that risk management also triggers, if you don't have a proper risk management, then also triggers your some emotional responses, because when we lose a trade, we try to revenge on the other trade. What I did is, like, when I lose a trade, say $100, then I had a emotional response inside me. Okay, I need to take this money back from the next trade, and then I increase my risk in the next trade, and that one also loses, and then we increase our risk in another trade. That's a very innate human nature. You wanna go back to where we were always. So what we do is, when we win, that's good. When we lose, we increase the risk. So that's where you have to do the risk management. You have to keep either losing or winning based on your strategy. You have to keep always the same amount of risk in each trade, and same amount of winning in each trade. That's how, after the 10 trade, or say after 20 trade, you win 10, you lose 10. So what happens is, if you have a proper risk management, say your risk reward ratio is 1 to 2, then what will happen after a 20 trade, you lose 10 trade. say in each trade you risk $100, so you lose $1,000, and you win 10 trade. That means if you have a 1 to 2 risk reward, then you win $2,000. So you lose 1,000, you win 1,000, 2,000, then your net profit is 1,000. That's how you will make money from trading. No other way. Okay. So what is the next mistake that I made? Mistake number 3 is I didn't have right expectation. That is very, very important. You have to have a right expectation. So what do I mean by this? If you have a say $500 account, that's what I started when maybe I started with $3,000 account, and then I saw a lot of video that someone made 500 to 5,000, 10,000, overnight. So I tried to do that. I'm being honest with you. When I started trading, I tried to double my account, and then overnight I made it 4,500, and then that made me more greedy. I tried to increase again. I made this 4,500 into 5,500, and the next day I blew out my account. So that is the fate of many traders. So if you have a small account, then focus on learning, not on money. If you try to double up your account, at some point you might be able to do that. If you are lucky enough, you might be able to double your 500 into 1,000, and then maybe you are super lucky, you might be able to double that 1,000 into 2,000. Then what will happen? You will keep doing it until you blow out your account. And then when you blow out your account, then you will try to take this money back, and you will recharge your account again, and then you will start doing it again. That's a vicious cycle. So to get rid of this, you have to have the right expectation. You have to know what you can expect from your trading and from your trading account. So if you have a small account, the best thing you can do is to learn, focus on learning, focus on long term. Take a small trade, gain slowly, because when you have the right skill, when you have learned everything properly, even with a $1,000, $2,000 account, you can make money. I know you can make money. You can risk, like if you have a $2,000 account, if you know properly how to trade, you can risk $200 in each trade, and then gain $500, $600 from that trade. So if you make 3 trades in a week, even if you lose one, you lose 200. If you gain 600 in one trade, you can gain 1,200 from 2 trades in a week. So that's a good money to even live in. But you have to know it properly first. So that's why focus on learning when you have a small account, rather than thinking to double it, triple it, because it will ultimately ruin your trading account. That's what happened to me when I started my trading career. So what's the 4th mistake that I made? I did not find my right trading style. I did not find out whether I'm a day trader, or I'm a swing trader, or I'm a scalper. Rather, I started doing everything at the same time. Someday I did day trading. I sat down in London session. I tried to trade in 15-minute chart or 1-hour chart. Next day I feel like, it's not working properly. Let's try swing trading, and then I forget about it. I just did the swing trading. Like I jump onto higher time frame, daily chart, weekly chart. Based on that, I started trading, and then you feel it doesn't look exciting, and then I started to scalping the market. I started trading on 1-minute chart, 5-minute chart. That's how I lose money at that time. So you need to find your right trading style, because everyone has a different personality. So you need to find your own trading style. If you are doing a full-time job and doing your trading as a part-time, that I would say best is swing trading. because it's convenient. It takes less time, but you can make same money as a scalper or day trader at some point, maybe more than that. So swing trading is in that case best for you, or you can do a day trading if you gain right skill, if you have enough time and money to do that, or if you're dedicated, then you can do day trading. But you have to, in that case, you need to set a proper time to sit and then get out of the trade in right time. Or if you are super fast thinker, if you have proper risk management strategy, you can do scalping. But again, it depends on your personality and personal interest and risk tolerance, ability to think quick. If you have to decide, either you are a marathon runner or you are a sprinter. So it's your job is to find out what types of style you like best, and then practice it over and over and again to program your mind. That's how you learn. And that mistake I did when I started, trading, when it took me a long time to figure out what is my best style. So what is the fifth and last mistake that I made when I started Forex trading? I couldn't stay away from the noise. I couldn't stay focused and believe in myself. So what I mean by noise? I mean by noise is that you will have a lot of information at the same time from different sources. So someone, say in TradingView, posting a trade, at the same time, same trade, someone posting in Instagram, someone emailing you, some friends is telling you somewhere. So there is a lot of information in news. There is saying something, and you have taken a trade in a certain way, and you can't believe in it. So that's what I did when I started. I took a trade. Okay, I go long with the gold. I thought that my analysis is saying like that. I go long, and then I saw that someone has posted in Instagram that gold is short, and then I saw something in the trading view, and I lose faith on my trade. I close, say, oh my god, I said I'm in $20 minus now. Just close it, because it might. People are saying it will. I'm long in this trade now. People are short, so better close it. And later I saw that I was right. So, but I'm not saying that you shouldn't follow people. You shouldn't, listen news, or you shouldn't watch Instagram, because you need to learn, and you learn from others. Without proper mentorship, without proper learning, you cannot believe in yourself. So, but you have to limit too much information coming to you. You have to focus on the right information, right course, right strategy, and learn from it until you gain enough belief in yourself that you can trade by yourself. So when you believe in yourself, you have enough confidence to trade by yourself, then you can reduce that noise. So that's what I did. If you learn from these mistakes that I made, it will be really, really helpful for you. I hope you enjoyed this video. If you like this video, please subscribe to my channel, share the video, thumbs up. It really helps me to reach more people on YouTube. Stay safe, safe trading. Thank you for watching. See you in the next video.